Welcome to All Market Summit Asia Extra. It is a pleasure to be with you today. I'm Angie Lau, Editor-in-Chief of Forecast for Yahoo Finance. And it is with great pleasure, and it's great to see a familiar face, former Financial Secretary of Hong Kong, John Zhang, who now leads nonprofit organization Esperanza. Welcome, John. We've got a lot to cover. But let's get our global audience up to speed here. You've been a longtime public servant who dedicated 35 years of his life to Hong Kong, the Secretary for Commerce to becoming Hong Kong's longest serving financial secretary. And now you're a fintech evangelist. So tell us what's been happening since the transition.
Well, myself, I have always been deeply concerned about well-being of our society, our world, as well as the well-being of the human race. I don't know if that has anything to do with my being a member of the flower generation. This is when I grew up. But what has fascinated me about finance is that finance touches everyone's life and is arguably one of the most important building blocks of modern society and public policy. But it has never been part of general education in schools. And I think that is indeed something that is quite necessary. And during my years of public service in Hong Kong, as you said, quite a long time, 30-something years, we went through several financial crises, some quite serious. But sound policies have kept Hong Kong's economic growth quite stable and the impact on our citizens quite minimal. And I've always insisted on being conservative, and I have been criticized for that, for being conservative. But in terms of government fiscal policies, I think we need to be conservative because we must be prepared for the rainy days. And this is similar to how people should treat their personal finances as well. That's my belief. And so after I left public service, I have been dedicating my time and effort in working with companies that help people, particularly young people, how to protect themselves in the 21st century with their personal finances. And fintech application, to me, can also democratize financial access for the underprivileged in our society with better protection and at lower cost. So here we are.
Here we are indeed, John. I mean, the generation in which you were a part of and then helped lead the generations. And now here you are in a private sector capacity, but in a nonprofit, and you're doing your own paradigm shift. And this entire theme of the summit is paradigm shift. And nothing could be further from the truth of what we're all experiencing right now, from economy to regional to health to life. In your view, what are some of the big shifts that you're seeing? And in your view, what can we expect in the coming years for Asia finance and fintech landscape?
Well, recently we've seen the rise of technology giants in many different industries, Tesla, Uber, Airbnb, and so forth. But the financial services sector, understandably, is actually the big elephant in the room. And aggressive startups are coming up all over the place, and they're disrupting traditional financial services in a profound way with some really exciting innovations. We have virtual banks, virtual insurance companies, wealth management companies. They are overcoming the hurdles of recognition of their businesses and brands to establish themselves as institutions for the new generation. Some of the problems for the new startups is that nobody understands what is a virtual bank or what is a virtual insurance company. And as a lot of the startups, they lack brand recognition as well. So they need to overcome that. And for the incumbents, I believe that they will increasingly adopt new technology as well as business models via acquisitions, as well as organic growth. But they are progressing gingerly. for fear that they might start cannibalizing the existing businesses. So for example, in an insurance company, they don't want to move too quickly to a virtual platform because they are worried that something like that may cannibalize their existing business. So it's a balance that they need to find in an interesting way, and I look forward to seeing how they would do that. And one of the new business models that I'm quite excited to see is Web3, and which incorporates a lot of decentralization on top of the Web2 infrastructure.
You know, that's really insightful about the businesses, but of course it depends on talent, and it depends on labor, and it depends on this next generation to really be prepared for this vision that you see in Web3. How do young people prepare themselves? How do we educate and get prepared for this future?
Well, as you know, paradigm shifts usually bring along many new and exciting business opportunities. And of course, it brings along a lot of risks as well. So we need to capitalize on these emerging trends in a timely manner with the right mix of technology and talents. We have lots of different technology, more than we can really digest at this point. So the big need is really on the talent aspect, and we need to educate our younger generation, or even ourselves, with the latest in technology, so that we can become the talents as well. A lot of this can be learned. But we are still at the early stage of the technology J-curve for many areas, like AI or blockchain and so forth. But don't expect a smooth transition in a leisurely pace. It's going to be more like a step function. So at times it may sort of stay quite stable for a while, and then it just get disrupted and jump, quite a few levels. As far as Hong Kong is concerned, we have a small population relative to some big cities in the world, but through the application of technology and our involvement in the Metaverse, and there's been quite a bit of that lately, we can actually serve everyone globally and work in a hyper collaborative environment with teams of international talents. And this is similar to what we did in the last century with our logistics. Some of our companies with no factories of their own are the biggest exporters in the world. And this is how we make use of logistics. And I think we can leverage on that same type of thinking, the same type of talent, and move ahead in the Metaverse as well.
Yeah, to be that central hub of activity, as it were, from exactly. the global economy of old to the global economy of the future. I love that. Look, you've been very supportive of young entrepreneurs and fintech startups in Hong Kong. What are some of the cool innovations that you've seen that you think will change the way consumers bank, invest, and transact? What are the projects that caught your eye?
There are actually a lot of very interesting, exciting innovations that are being implemented here in Hong Kong. I'll give a couple of examples. I've been working quite closely with two young startups in Hong Kong, and they're doing some pretty exciting things. For example, a company called Stashaway, which is a digital wealth management platform. They reinvented the way that wealth management is done in Asia. Traditionally, global asset allocation has only been available to clients of private banks with very high barrier to entry. Without a couple of million US dollars, many private bankers won't really, return your call in a way. But in Stashaway, they have a very low entry. It's basically 10,000 Hong Kong dollars. You can open an account, and they can invest that in different ETFs. And what they are doing is using their proprietary intelligent investment system. Stashaway is able to offer automated portfolio management to customers at a fraction of the cost of traditional mutual funds, as low as 0.2% per year, and with almost no minimum balance. So that is something quite exciting, and I think it would help to democratize in a way a lot of the people who wants to manage their wealth better. And I think that is something quite important for the coming century. And another company that I've been working with is Bowtie, which is a virtual insurance company. They protect Hong Kong people with pure health protection and an affordable price with zero commission, because we have no agents everything is done online. And this startup company is helping to relieve the burden of the public health sector by making it accessible for customers to make greater use of the excellent private sector services that are available here in Hong Kong. And I hope that this serves to improve the health of the population and the services provided by the different institutions. So both Stashaway and Bowtie are founded and managed by young people, and they make extensive use of proprietary digital platforms. And there are many examples like that in Hong Kong, and I'm really proud about that.
As you see some of these projects grow, though, it does need some watering, and that means support either through investment or policy support through government. In your view, as a former civil servant, what is the role of Hong Kong in nurturing some of these innovations, in nurturing some of these ideas that will take shape?
I think you're absolutely right. We need the collaboration of both the private sector and government. The government can implement some innovative policies that would encourage the growth of a private sector that can really help make better use of a lot of the innovations that we have. And so that collaboration is really important. And I think for Hong Kong government, I hope that they would also be able to be more concerned about connecting better with the world, because it is the international business that we excel in. And I think we need to continue doing that, even in the 21st century with Web3 and the Metaverse, and especially so.
Yeah, I want to pick up on the Metaverse. You are doing more than dabbling, John, I have to say. You, along with many artists, celebrities, personalities, have also introduced their artwork collectibles, and in your case, also artwork using NFTs. I gotta say, this is a. I love the discussion of this fireside virtual chat happening in our own metaverse, from Asa to Choye, NFTs. You got to explain this to the global audience. And I love also the nod to your nickname as well. Tell us about your project. Tell us what you're doing with NFTs.
The intention is quite simple. To me, we are going through a pretty difficult period here in Hong Kong, and I would like to give people, at least some people, in this case 3,000 people, something to cheer about. So I hope that the Choye NFT that I'm minting now can serve that purpose. NFT recipients will also be receiving some small gifts, 6 of them from me every 2 months or so. It is also a way for me also, which is also a very important purpose, to incentivize people to raise their interest in NFT beyond the use as a speculative tool. Most people here in Hong Kong, or probably in the world, have no idea what NFT is. They have no idea what Metaverse is or Web3. But by issuing the NFT and giving it to people for free, I hope that would help incentivize them to learn a bit more about it now that they own something like that. And So, and these are important innovations of the 21st century. And what we see now in the use of NFT is just the tip of the iceberg. I think there's an incredible range of use that has not even been talked about yet. And I shall also be making use of the NFT and collaborating with other institutions that share this common belief, starting with my NGO Esperanza. We're trying to get more members into this, incentivizing them with the NFT. And I'm also working with a very interesting organization called Dialogue in the Dark. And I'll be using the NFT to also help them create different types of membership to incentivize people to learn more about the needs of the people who require this sort of assistance. So through this NFT, we hope to bring more awareness to the emerging trend of Web3, the Metaverse, and in general, the NFTs.
You know, the market right now, when it comes to cryptocurrencies, NFTs, there's just been part of a contagion that we've seen spread from equity markets and certainly take hold in cryptocurrency, especially in the past few months. How do you view the recent events of the market and the impact that it's going to have on this technology? Are you concerned? Does it make you question the technology? Do you think that it casts doubt on this technology?
I have always been skeptical about the volatility and speculative nature of cryptocurrencies. Of course, there are also a lot of regulatory concerns. When I was financial secretary, we thought about this about over 10 years ago, how that would impact on the sort of financial environment and what the regulatory concerns should be. But NFTs to me are quite different from cryptocurrencies. They are purely digital assets, and we have not even, like I said before, we have not even seen the tip of the iceberg in terms of applications. So opportunities are massive, and we should continue to explore how they can be used. I see a lot of NGOs now in Hong Kong making good use of the NFTs to create different classes of membership to attract more people interested in what they do, and as well as the various technology. Recently, we have gone through a speculative bubble in this thing, but this fact does not negate the technology itself. Just like in 2000, when the internet was getting widely adopted, the dot-com bubble bursted at that time. But even with the burst, great companies then followed. And we had Facebook, Amazon, Google, they all rose to become giants that they are today, enabled by the technology that was quickly developing at that time. So I'm still keen about NFTs, and I'm confident that their applications will continue to grow to become key tools for the future.
I want to ask you to take out your Hong Kong crystal ball, gaze into it. For us, you've spent the past 3 decades dedicating your professional and personal life to leading and guiding Hong Kong. In the future, with this technology that you see it today and the seeds that you're planting today, what does the future look like for Hong Kong with this new technology, with the vision that you've so eloquently described for us today?
I really see huge potential for many real-world applications. For example, many commercial firms are now using it for marketing, for example, and this is just a small example. And I think creative people is going to come out with a lot of innovative ways of making even better use of NFTs. And as I mentioned, NGOs like Dialogue in the Dark are using it in a creative way and sort of in a groundbreaking way for community building, as well as customer engagement purposes. And that's really great. So with the wider use of NFTs, businesses will begin to open up in the metaverse, and transactions will be greatly facilitated. And that means a whole lot for a place like Hong Kong. We are a small geographical area, but in the metaverse, we are infinite. And so we hope that people would make greater use of that, greater use of the NFTs and all the new technologies in the 21st century, and make Hong Kong that infinite space for business.
Technology is about connecting. And I think with your conversation today, we have connected the dots a little bit better today. John Zhang, always a pleasure to speak with you.
Good to talking to you.
And thank you all for joining this fireside chat with John Zhang. Do check out more interviews for All Market Summit on Yahoo Finance. Yahoo Finance All Market Summit Extra Asia 2022 continues from Hong Kong to our global audience. I'm Angie Lau, Forecast Editor-in-Chief for Yahoo Finance, and welcome for those of you joining us wherever you are. Well, there is nothing bigger of a paradigm shift than changing worlds, or better yet, connecting worlds in a new virtual reality. And one of the biggest innovators doing that right now is Sebastian Bourget, COO of Sandbox, who, by the way, spent the past decade creating mobile games that were downloaded millions of times. So you could say he's a little bit of a gamer, an Uber gamer, if you will, for the gamers. The metaverse is defined, as you may know, as a network of digital virtual 3D worlds where people connect. But let's find out how Seb is defining it himself right now. After all, what Sandbox is building could very well be a world that will augment our realities and our lives. Seb, welcome.
Hi, Angie. Good to be here with you today and discuss about the metaverse and its possibilities.
Well, we're in the Yahoo Finance metaverse, if you will, this virtual reality, virtual conversation room that we're having for a global audience. But I want to tour this is really exciting. Metaverse has really captured the imagination of so many more people than the industry alone. So let's get a tour.
All right, so here we are. Can you see? Here on our left to see some of like those characters and contents that are present and constitute this new cultural space that is being built by the community itself, involving also major brands, creators from all around the world, and of course, content made by our team.
That little guy that I'm seeing running around, that's you. But that could be anybody.
That could be anybody. You get to choose your own identity. That identity is unique. It's an NFT. So that 3D representation of yourself can be as realistic as you want, or could be totally different, very creative, even non-human if you like.
And it's really transporting all of us, regardless of where we are in physical location around the world. Suddenly, it doesn't matter if we're in Paris, if someone else is in New York, if someone else is in Hong Kong, we can all hang out together.
That's the thing. That technology allows us to enjoy with our avatar, have fun into this new 3D virtual space. I call it almost a new digital nation with no frontier, where you find users from anywhere in the world. And you don't actually know where's anyone from. Well, we've been discussing about the metaverse, how it's essentially different from what we've seen before. We at Sandbox are contributing to build part of this open metaverse, putting a lot of focus on creativity and imagination first. We don't want to make the metaverse a place focused on commerce or transaction only. It will evolve into it eventually, but at the beginning, it should be fun. It should give us reasons to want to come back, to interact, and that's how it will grow and become mainstream. And one of the essential aspects of it is to be able to choose your identity. You can be whoever or whatever you want. That avatar, we already discussed, that representation of yourself can be a man, a woman, or a non-human creature. It can be unique as an NFT. So there's only one person in the world that has this look and appearance, such as the Snoop Dogg in Gucci. And that identity, you will be able to use it across all those worlds, or even use external identities into sandbox. That's also the beauty of like being an open metaverse. So you're now in a world, your imagination is sparkling. You can unleash your idea. You can go beyond physics. You can go beyond frontiers. Technology allows that, but it has to create more new opportunities for everyone to be really that disruptive and to keep appealing to people. That's why, and we've put a lot of energy and focus to develop those new jobs based on skills of the 21st century, creator-related job, discovery-related, business-related, community, event, engagement, but also being a player provides the possibility to earn a salary through the skills, through completing quests and having items, currencies that you can potentially keep using or selling. But that may be enough talk. So why don't you create your avatar right now and try joining the metaverse? Join me there, join those creators, and let's see what we'll create together.
Okay, I want my metaverse avatar to definitely have a little bit of red. I don't know what I'm going to do with my hair. I might be a little bit more crazy. That's very, very cool. It's almost as if I were to, and correct me if I'm wrong, Sandbox is that operating platform, the real estate, as it were. The value actually comes from people like you and me and those who are watching in the audience right now who want to get in, create an experience, a service in that ecosystem, and then engage with it with other participants, with other avatars, and create that value. That's where I'm seeing the growth, and that's what I'm hearing from you. Is that right?
I think like the growth is also going to be in the idea that this is an opportunity that becomes accessible to people who have been left off by other like Web 1 or Web 2 typically. We have roughly 2.5 billion gamers in the world. Many people think like the priority is to convert those existing gamers into players that will enter the metaverse. Truth is, if you look at any new technology disruption or console and gaming innovation, they have been always enlarging progressively the market by touching new audiences, younger, older, more casual game. Smartphone have introduced hyper casual games and new ways to have fun and interact. And I find like the metaverse has all the ingredients for it. Like it starts with gaming, but we're going to socialize, to attend virtual shows, virtual concerts, work in the metaverse, visit virtual museums and galleries, and sometimes even invent new format of interactions, expression through the dance, through our avatar, etc. That means also like by having creation tool, allowing anyone to become a creator, even though they never learned before any programming language or specific skills, is important and can create new vocations. So that's our angle. We feel like on one side, we make it accessible to you no matter where you are in the world. We support creativity via our foundation. We bring on brands and touch the fans of those brands who also want to become creators, participate and co-build the world of their favorite celebrity or brand together, becoming their virtual neighbor and participating in all sorts of competition contests, and then nurturing that talent on and on. I think this is so far has been successful and allowed Sandbox to grow to more than 3.5 million users, to more than 21,000 landholders to date. And they provide this around all this excitement around the world about like what can be done. Like people start to dream again. There's innovation. There's new things we've never seen before. I find that beautiful.
It is really a figment, if you will, of your imagination. You've been involved in the gaming industry for most of your career, for most of your life. Once upon a time, this was part of your imagination, and congratulations on bringing it to fruition. But for our audience, as we kind of peel the onion a little bit more and get back to the core of it, how did you get started here? What sparked it for you, for Sebastian?
You know, since I've been playing video game as a teenager, I always had this idea like one day I'll like to do video games. But then progressively, I went to like study into an engineering school. I went to an exchange program in Hong Kong. I broadened my culture, global culture, and exposing to discover a new region of the world and so on. And I've kept always that curiosity. How can we use new technology, empower users, make it accessible to users through that? Around 2011, with mobile phone, smartphone, I found it was possible again to create video games, just being small teams, small indies, creative, whereas it used to be console gaming, large team, very cost expensive production. And we had that idea, why don't we use and allow anyone to make games just by the magic of their finger? Just by touching the screen, they could produce levels, add content, characters, platforms, enemies, and share those creations into an online gallery for all the players to play and enjoy. That idea became largely successful. And that, as you mentioned, drove like millions of installs. By then, 70 million creation, 40 million installs. And we saw like, yes, we've succeeded to empower a creator, but yet something is missing. And that thing that was missing is like those creators, those people who were pouring their heart, their hurts, their time, their passion into that creation. They were leaving the game for after a while, for 1 year, 2 years. We are not able to retain those talents just because we were not able to share part of the values they contributed or any revenue of any sort. Us as a company, we were making revenue, but not them. And we were, even if we wanted to, the platform limited us. Like we had not access to their email, to payment system to facilitate that.
Right.
So I was frustrated. Around 2017, keeping exploring around the realm of new technology, we found blockchain, and more importantly, one of the first blockchain games. So of course, I've been benchmarking hundreds and hundreds of games to like, find at the very down level what makes them fun, how they work, what's the user journey. And when I saw that first game, CryptoKitties, by then, I understood that the important aspect was not the gameplay itself of breeding virtual cat. It was essentially the fact that players were buying the cats from other players, not from the developer itself. And they were buying those cats, not in the game itself, but on an external marketplace. And that is something in the industry itself, like we've never seen before, like always, it was always closed environment, very controlled, very limited. You cannot do those things outside. The developers were limiting it. Here I saw finally the way like, oh, players can sell the thing they want, can monetize it where they want. Why don't we allow anyone to create their own NFTs, their own content, and sell them, monetize them the way they want? So that gave us the idea, let's combine user-generated content, NFTs, make a new version of Sandbox, and that will solve our core problem of like retaining talent after we empower them so they can monetize and get most of the value of the content they create. We spent 4 years working on a new version of Sandbox, built on blockchain technology, developing more than a game, a full platform with different tools, 3D editor, marketplace, map, game maker with no code, and creating that world from the ground up, bringing more and more brands, as you can see from behind me, a lot of cool content, and defining a new format of entertainment where everyone will be accepting and embracing this idea of user-generated content and community-driven approach.
It's almost as if you're allowing me to be my own gaming developer without needing to understand programming, create something within the Sandbox ecosystem, my own game, if you were, an experience. And I want to engage, I want to create some sort of experience or entertainment or interaction with other players, if you will, and then they get to pay me or the business through sand tokens, right? And in essence, I've monetized, I'm incentivized as a gaming developer by simply being there, being of value, and then also you have more developers coming, but they're just regular people.
Exactly.
And you're allowing you to be a gaming developer.
That's it. Basically, the core vision of Sandbox is how do we empower everyone to become a creator? And I would very much love to see your game, Angie. Let's see what you can make with Sandbox. And then you can engage with your audience. People can play with you, create with you. You can talk about what you create, and so on. That makes it very beautiful.
You've sparked my imagination. I know that as we move into Web3 at Forecast, that's definitely on the roadmap. It's a very incredible possibility of the future that's happening right now. And I want to talk about the enterprise prospect of it, because you're not only talking to regular folks, you're also talking with companies like Lionsgate Studios, Meta, Hollywood, CJ, NMM in Korea. How are these collaborations going to change, you think, what people's real world experiences are going to be? Are they going to be augmented, or are they going to be replaced by the experiences in Metaverse? What are your thoughts?
Indeed, I feel like ultimately Sandbox is already shaping to be more than a gaming platform, but a full entertainment platform with brands from fashion, from lifestyle, from gaming, from architecture, from music, with music artists and music labels, from luxury, and but also from the finance sector, from the banking sector, from the industry, from insurance as well, or shopping, retail, commerce, and so on. Ultimately, over the next 2, 3, 5 years, all the activities of the real world will be present in the metaverse. And we're going to spend a growing number of time doing all those different kind of interactions in one place or in multiple places, since we can take our identity from one to another. And I think, yes, like technology can allow us to increase the potential to augment the reality going beyond physics, making it more fun, more interactive, more beautiful, and a place that you feel like, oh, I want to spend time here. Oh, I'm always surprised about what's happening here. And oh, I can be freely myself in here, at least more than in reality. And interestingly, the real world reality is still going to exist and keep going on, etc. But if we spend more and more time into this virtual world doing all the activities, that virtual reality will also become our actual reality more and more, and will accept being in both.
Hollywood already had some version of this in Ready Player One. Do you think that that's going to be the future?
I think like it's really interesting how Hollywood is always depicting a certain future, sometimes even a more of a dark one than a positive one. I try to see like a more brighter future where people and their skills are actually being empowered. People discover like they are talented at things they didn't imagine about. And no, it's not the end of the world. And no, we are not all in VR. So one important thing, I don't think the metaverse is about VR at all. The metaverse is about like interacting across various devices and platforms with AR, VR, or traditional 3D on PC, Mac, or mobile. And we don't need to be the same person that we are in the physical world and in the virtual world at the same time. Like our two identities, the virtual one and the real one, or both are real to me now, can actually be disconnected. I can have actually multiple identities online depending on my community, place I go, etc. And that could have a positive effect back in rebound in the real world.
It's different versions that we can express of ourselves. In real life, I can interact with you one-on-one. Over virtual reality, I can react and interact with you a little bit differently. I can write, it could be in social media, it can be in person, it could be online. There's just different versions and expressions of us, but at the core of it, it's just really us. So what does us look like in the future that you're building? All of these things that we have right now that we're experiencing in the real world and what you're building out in Metaverse, what can we expect to see in the future that you see?
I think we're definitely gearing toward a future where we no longer have the same attachment to physical goods as our previous generation or ourselves used to have. And we attach more and more importance to the virtual representation of ourselves and all the virtual good, digital good that now can be valuable good thanks to that technology. Doesn't matter. Like we're already seeing kids who want to have more like cards and virtual skins into games than actual toys, because they spend time, because those virtual goods give them more fun as they play with their friends into those games and virtual world than they do with the physical toys physically. And that is a movement that can only accelerate once a whole generation has accepted the idea that it's the new normality to spend time, to socialize, to interact, to date, to work, to learn, to work, earn a revenue or new salary or new job into these spaces. I feel like we will have been moving into this true digital economy that most probably will overcome the real world physical economy. And we will no longer be constrained by what we've been constrained before, like the very notion of in which country we are born, what is our ethnicity, what is the social status, our education, etc. All of these things will matter less and less in the virtual world, where ultimately you're valued based on your skills, the contribution, the content you create, and the community you belong to.
True inclusiveness, true equality, nothing dystopic about that, and it's limitless. Seb, it was great getting a tour, getting inside your head a little bit better for our audience to understand the future that is going to be a lot more experiential and global. It's always great to talk to you. Really appreciate it.
Thank you, Angie. I really look forward to see your game and spend more time with you online.
Okay, next, we're going to have this conversation in the sandbox. That's the next one. Seb, a pleasure. All right, audience, that was your glimpse at the metaverse. So many more conversations to come. Check out more interviews for All Markets Summit on Yahoo Finance web pages. I'm Angie Lau. From NFTs to DAOs, what is the future of Web3? We continue with our paradigm shift at Yahoo Finance All Markets Summit Extra Asia 2022. And it is with great pleasure we dive into this huge pool of technology innovation with our next panelists. Let us welcome right now Alfian Sharafuddin, DBS Bank's Managing Director and Head of Technology and Operations in Hong Kong and mainland China. We have Jaehan Chu, co-founder and managing partner at Kinetic Capital. And we have Eddie Lau, CEO and executive director of Arta TechFin. And it's really great to have all of you guys here. Welcome, everyone.
Thank you.
Well, thanks for having us.
Thank you.
Okay, so our theme is paradigm shift. Y'all know that. So we all have experienced paradigm shifts in a very personal way, in a very professional way, in a very global way. So it's very thematic and very apropos for 2022. And let me just start with this question for everyone. What would you say is the most significant paradigm shift you've experienced in the crypto sphere, the blockchain sphere, digital assets, Web3 space, these past 12 to 18 months? And Jaehan, I'm going to start with you.
Thank you. Thanks again for having me. I think one of the most impactful ones, we can't ignore the recent events of the Terra Luna crash, subsequent kind of Three Arrows Capital crash, and all the kind of knock-on effects, number of institutions kind of going down. I think the paradigm shift and the takeaway is that as amazing as blockchain technology is, as kind of revolutionary as cryptocurrency is, I think that the industry itself still has a long way to go in terms of being a stable and globally scalable platform. I think that we've learned a lot of lessons and will continue to learn these lessons, but the institutionalization of the space, the maturation and the evolution, I think, towards a combination, maybe even a hybrid of Web 2 and Web 3 from the business side as well as the technology side is probably the most likely scenario, rather than in the near term, a fully decentralized, fully open, fully disintermediated ecosystem that we were promised.
Alfie, and I bet you probably have a lot of thoughts about that, especially if, you know, to Jaehan's point, we're seeing both the business participation in the innovation push. In your view, you know, from your perch at DBS, what do you think has been the most significant paradigm shift in this space in the past year or so?
Sure. Thank you for having me. So I kind of agree with Jaehan. So one of the big things we are seeing in the whole NFT Web 3.0 space is actually the underlying technology. So from a bank's perspective, we're really very excited because, you know, for the first time, not only are we seeing this whole decentralized ecosystem, but I think the underlying technology of blockchain is really going to be very, very useful for the banking sector. I mean, one of the fundamental constructs of banking is always requiring a middleman or a settlement house, someone in the middle who many parties trust to do the finality of settlement. And it's actually a very cumbersome process. So today, when you try to clear checks or when you try to do international payments, it takes, you know, from a couple of hours to up to 2 days or even 3 days if it's a more complicated transaction. And what we've seen being enabled by the underlying fundamental technology of blockchain is that finality of settlement, you know, comes down to a matter of milliseconds or even seconds, or, you know, in the worst case, minutes. And that will, we believe, will fundamentally revolutionize the speed and the ubiquity at which transactions can be performed all over the globe. And we, for one, you know, are quite excited by what that shift will mean for our banking industry.
You know, and it's a very interesting time where all of this is happening. So the cross-section of this innovation, as Jaehan pointed out, this is also, you know, a lot of macroeconomic headwinds. There's, you know, there's been contagion. Some serious damage has been done, not only in terms of wealth destruction for those who have been impacted by 3AC and Celsius and et cetera, but also the perception of this space, right? To note, monthly NFT sales fell below 1 billion for the first time since we've seen in the past 12 months, and NFT artists are now getting their first major tests since crypto's collapse. How are you all seeing the market right now? And how are you almost navigating this negative sentiment as you move forward with either investments or innovation?
Interesting. I mean, the space of DeFi and in fact CeFi has always been dominated by the non-banks, right? And people always felt that it's sort of a way to get away from the centralized organizations. At DBS, last year, actually, we launched our digital exchange, and we allow trading of the majors, Bitcoin, Ethereum, a couple of other coins. And I think what we found is that, you know, we sort of occupy this sweet spot because for our, you know, accredited investors, they actually now have a place where, you know, they can trade and custodize their large holdings of crypto in an institution that they trust, right? Because they've been working with us for many, many years. We're a regulated entity, you know, being a bank. And therefore, you know, we kind of have found that sweet spot where, you know, people need to find this place of safety. And they find that if they put their crypto CeFis, well, as some of the organizations out there have shown us, it's actually not that safe as people thought. So we find that, you know, now people are saying, hey, you know, I want to be active in this space, but where's a place that I can feel safe being active in this space. And you know, our DDEX that we launched, it's actually one of those places, and we're finding an uptick of activity actually. So it's quite an interesting development for us. Sorry, Jehan.
Yeah, no worries. I mean, I'm not sure I agree with all of that. I think that, you know, part of the reason why, you know, an institutional platform like DBS can be safe is because the type of products that they offer are more conservative. And the types of products that people actually want to invest in are higher risk and higher reward. You know, I would love it if you guys would offer 20%, you know, yield on stablecoin deposits as Anchor was, but that's not what you do, right? And so I think that the lesson that was learned is that, you know, with great, you know, kind of reward comes great risk, and that's kind of one of the takeaways. Now, to your question, Angie, I think what we're seeing as venture capitalists ourselves, I mean, the market is actually still, there's an overcurrent and an undercurrent. The overcurrent is that there's a great pullback. There are a lot of firms that are pausing writing checks into startups and pulling back in their investments. Everyone's definitely being a lot more cautious. But the undercurrent is that firms who have been in the space and understand and have kind of committed capital are continuing to pile in. They're continuing to do really large deals in strong companies.
But what you're talking about, Jehan, and what I love that we're talking about right now, is what are the fundamental basis of value that exist in the ecosystem? That's what's really, really exciting. And so we can talk about, you know, the gyrations and the volatility and the contagion in the market, but that wipes away a lot of the projects that were teetering, and it reduces and sharpens the focus to see the projects that are actually healthy. Yeah, Eddie, what were you going to say?
Yeah, I was about to say, completely agree with Jehan. We see so much demand from institutional clients and also corporate clients to start offering or even thinking about to offer security tokens. You know, that's something that the regulator have to approve. So simply put, if you want to borrow money or you want to lend money, you can put it on tokens, except that this time you can go to the regulator and ask for approval. And people are doing that. So that I think last month there were two security token offering that are privately placed. They were done in Hong Kong. So maybe the amount of crypto native token will go up and down. But one thing for sure is the amount of regulated or regulator approved security token will go up.
Oh, I wanted to follow on that a little bit more, Eddie. You know, how are you creating new applications of you know, NFT, of tokens in the equity space, in the asset space that's kind of different for a lot of people? How are you unleashing value?
Right, exactly like what you say, Angie. You mentioned the value proposition or the true value that blockchain can offer, or cryptography can offer to the world. So if you look at what JP Morgan has done and also what Goldman Sachs has done, one thing that blockchain can resolve is, for sure, is to make your settlement quicker and faster and more transparent. So I was a trader 20 years ago. I was, you know, when we buy a bond, we want to lend it out so that we earn the carry or repo interest. It is painful. It was paper copy, and later on become digital. And now Goldman and JP Morgan offer blockchain-based repo. It was instant, and you can do it on weekend. You don't have to wait for Monday morning to do it. So just for that, there's a huge market for the entire repo world. And now the application only restrict to EIB, which is European sovereign bonds, and also US Treasury. It will apply to every single bond. It will displace every single repo transactions that were done either on paper or via the traditional way. So I think when blockchain application can actually generate values, then, you know, people want to tokenize their securities. So to tokenize bonds is no different from tokenizing, you know, cryptos. It's the same technology. The only difference is whether, like Jehan said, would that be how he started? Actually, it was a great reminder. Is it going to be fully permissionless, where everyone can come on to mint a bond and settle a trade? Would it be permissions, where you have to be qualified or you have to pass certain tests, or you have to be KYC in order to join the network to perform your duties? I think that would be the big questions.
Well, Jehan, where are you making your bets? Is it permissionless? Is it decentralized, completely decentralized layer one? Or is there permissioned regulatory rails? I mean, how are you making your bets right now?
Yeah, I mean, we've invested in over like 240 companies by now. So our kind of pattern recognition is pretty interesting and developed. And what it's led me to believe is actually that you have to keep an open mind. A lot of our peers are kind of much more invested in pure decentralization, and we also invest in decentralized platforms, whether it's like assets or NFTs or GameFi, et cetera. But we've also taken a very, very keen interest in the last 2 years in permissioned ledgers and permission chains. And probably our biggest bet is close to home in Hong Kong, which is in China's BSN, the Blockchain-Based Services Network, which is China's national blockchain infrastructure. And what that is as you can imagine, is a permissioned ecosystem of blockchains where China has basically wiped clear the notion of fully decentralized, uncensorable type of access, and created a system which fits their regulatory framework, which is permissioned. So we've invested quite heavily in that. A company called Red Date, we co-led that with Saudi Aramco, so it's gotten a lot of attention.
And Alfie and I wanted to follow up on that because DBS has done some really interesting work in blockchain and crypto, and really taking on the perspective that as one of Asia's biggest banks, to really lead in terms of innovation. How do you balance that, however, with the needs of a highly structured bank, highly regulated? You've got compliance issues that to the nth degree, as one should in the traditional financial and institutional space, and yet at the same time really take a lead. Do you have to do policy conversations? Do you have to do regulatory conversations? How do you balance innovation at the speed of innovation, but still, you've got to represent DBS, right?
That's a very good question. And I think to Jehan's earlier challenge to my point, I mean, we can't do the 20% type of, put your money here, 100%, 20% returns year on year, simply because, you've got to take on a lot of risk. So what we have found is that within our organization, because you rightly pointed out that we are highly regulated, we really have to identify individuals who really understand the risk landscape. And we then have to set policies that, people are completely aware of, kind of like the risk dynamics at play. And because the whole space is quite new, right? The whole concept of DeFi, the ownership of the transaction on a blockchain, what is off blockchain, what is on blockchain, we tend to, at the moment, have to take a slightly slower speed than what's out there in the wild, right? Because what's out there in the wild, people can take more risks, right? They can go and push the envelope until they break. And when they break, kind of like the repercussions are huge, but kind of like some people can get away with it. For a regulated entity like us, we cannot. So therefore, we've got to take very careful and measured steps. But at the same time, we allow for some small sandboxes and some small pilots to go on within a controlled environment, so much so that if it does fail, the failure is containable, and therefore we get to learn quite quickly. So to sum it up, we allow for a lot of experimentation, but within fixed bounds, whereby if people fail, we don't take down the whole bank or even a significant or even any significant portion of it. That's what we do, a lot of experimentation.
Yeah. Experimentation is important because it gives us a lot of data. And then it's how you execute on top of that learning. What do you guys think about NFTs right now? We saw the mass rush and hype and adoption, and it was very, very exciting. And as I mentioned earlier, that has definitely cooled. What is the next wave of NFT applications that you're excited about?
Well,
Eddie, I'll start with you.
Yeah, we're working with, funnily enough, so many Web2 people. We call Web2 populations. In fact, the Web2 old guard have been, the corporates, the instos, business people who are excited about issuing their NFTs, and for their customers. Actually, they don't just do it for branding. Used to be just, hey, I'm in a metaverse and I'm doing an NFT, you can download and all this, those are more branding, right? Now we're putting it to real business. What it means is, say, all of us will travel again. We go to a hotel, we can pay by Bitcoins, and also your memberships will be on NFT, and all your activities will be tracked. And guess what? You spend money here, you put a good comments there, it's all on blockchain. And for that, we'll reward you again on blockchain. So, and your NFT will be upgraded now, given all your contributions, it'll look better, I'm sure. So we're doing a lot of projects for corporates in the regions to make their business blockchain enabled, and so that their clients can have NFTs and can make, actually, in fact, they will feel more belongings to the branding. That's the big next wave. And in fact, this is not the next one. I think it's the current one.
Yeah, so my sense is that people will get more selective on the NFTs they actually purchase, and that takes off. So I sense that quite a number of those NFTs out there without a true utility will probably go to the wayside. For an NFT project to succeed, I mean, the underlying smart contract, I feel, has to have some useful value. So we've seen a lot of metaverse land out there, right? That actually has value because you can rent it out, you can build stuff on it. So those types of NFT will, I think, live for a long time and will actually increase in value. Those that provide membership to certain clubs, certain exclusive clubs, those will increase in value. Those that accrue royalty to people, I think those will increase in value. The type of NFTs that you just mint and you try to sell and kind of like the greater fool theory, I think that won't work. So it's quite important to be very discerning, in my view, of what NFTs actually bring value to the individual or to a use case. And then those, I think, have quite a good future.
Yeah, but I want to emphasize, while NFT prices move up and down, and sometimes move up a lot and then have gone down a lot, I'm actually a little bit, I'm not, what's the right way to put it? I don't think there's a definitive answer on the greater fool theory or who come first and pump and dump later, that kind of trading. I do think that a lot of Web3 communities or the Web3 NFTs, they do carry a lot of values and actually culture. It's not something that, it's a bit like when we were in high school, where we have a lot of good friends, and then we have a lot, alumni book, and people have common memories and collective values. Except that this time it happens online, it happens in the Web3 world, and they created a community where they will use your NFT and they love it and they pay for it. So I think there is a lot of real NFT in the world that are branded as not real, and there are a lot of great community that we are actually currently working with to bring the Web2 people into Web3. We can't just bring in Web2 people by moving them, giving them an NFT and hope that they will become an NFT native. We need the Web3 people to educate them, and that's what we're doing.
Yeah, for NFTs, I agree with most of what's been said. I think that from the content NFT side, we've just gone through the first cycle, just like we went through the first kind of cycle of crypto in 2017 with the kind of boom and bust. And, there's going to be a lot of casualties, a lot of people left with a lot of useless, worthless kind of NFTs. And that's the game. People will always come back to the casino. And I think that, in the next bull run, we'll see the exact same thing happen again. It'll just be different NFTs. But that's, again, that's the sideshow. That's not the real kind of, headliner. The real headliner is data. And I'm surprised that nobody's really talking about this, but data NFTs are absolutely 100% the future. NFTs are not things, they're just capsules. And the most valuable thing you can put inside of it is data. One of our companies, Snickerdoodle, they're basically replacing browser-based cookies with user data NFTs. And in all of these kind of NFTs, we're looking for fundamental value and utility. What could be more useful than being able to establish user profiles, user preferences, user incentives, privacy in the Web3 space, where all you have is an address and you have no idea who's behind it. So these types of things, whether it's user data or enterprise data, financial data, industrial data, all of these types of kind of next generation NFTs, I think will really be data NFTs, and it won't be about speculators and retail. It's actually going to be all industry. And I think we're going to kind of, revolutionize and rethink the way that data structures exist from the Web2 world into a more distributed, open, transparent Web3 world.
Absolutely agree, Jahan. We're putting our partner managers or fund managers and some installs, we're putting them on blockchain, and to exactly like what you said, we're getting the track records on blockchain, we're getting the risk exposure and the trading style on blockchain. It's all data driven, and we machine learn how they behave, and then we ask for their approval. Again, it's their data, and once they approve, we'll actually show it to the world on how good or how bad they perform. So data driven NFT is the future.
And the difference here is that if I'm the owner of my own NFT with my own digital identity and my own data, that I could trade that in terms of value, either in a membership or if I'm getting something in exchange, but that would be clear to me. And that my data is, I own it and I can share it if I want to. That's a very interesting application of it. It's one that almost the society demands. It's what we're all really frustrated by, the Web 2 version, and where Web 3 might be leading us.
Yeah, and also you get paid for it. You get paid for it. You get rewarded for sharing your data.
Yeah, exactly. The related to this whole BSN thing, the founder, Yifan He, he likes to talk about these public IT systems and how we're actually going to evolve to the point where it will be, he likes to imagine that eventually, within 10 to 20 years, it will be illegal for large technology companies to store user data. They will be required to hold it in public IT systems where the users have their own keys. And, if you take like GDPR to its extreme and you fast forward it, that's actually perfectly, that's exactly right. Our user data will be held in public IT systems that we individually have control over, and we grant or not access to it. And, Facebook, WeChat, or Tencent, they won't actually be allowed to hold our data anymore. And they won't want to. They don't want to hold it now.
I mean, that would, this is what everybody wants. The companies don't want to because the liability is too great, the privacy issue, all the rest that comes with centralized spaces that could potentially be hacked. They don't want to deal with that. And we want, the individuals want we want our digital data back. We want our digital identity back. I love where this conversation going. So if we're going to extrapolate where the future is going, NFTs has a real interesting value beyond art, beyond all the things that we're seeing right now. So that was an interesting exploration. But before I end this conversation, what about DAOs? How do you guys feel about DAOs? For our audience, this is where anyone can participate in an organization and vote, essentially. It's democratized decision-making for a specific project. Jahan, are you interested in DAOs? Are you investing in DAOs? What do you think of it?
Yeah, I'm kind of bearish on DAOs, actually. I know there's a lot of interest in them. I think conceptually they're incredible, but I think that the kind of investment in DAOs is a bit ahead of its time. A lot of the DAOs that I've seen are kind of community experiments rather than community businesses, and there's a big difference. And a lot of the dynamics we see are that out of a DAO of 1,000 people or 800 people, there's 5 to 10 people that do all the work, make all the decisions and all the leadership. And for an investment DAO, that's just called a venture cap. That's just called VC. I think that it's not a tooling issue. There's a lot of great tools out there that make it easy, that help to coordinate, all the voting, all the governance, et cetera. The problem is that people are either too lazy, too disinterested in actual governance, or not incentivized enough to really kind of participate. And that's the double-edged sword of democracy. It requires people to actually spend and invest their own time to become educated and involved. And not everybody wants to. Some people just kind of want a free ride. And actually, that's actually most people. So until DAOs can really solve the participation problem or find mechanisms to actually make it easier and increase participation, I think DAOs haven't really found their product market fit yet. I do think that DAOs are creating really interesting tools. And again, I would go back to the hybrid model. I think the lessons and the tools and the ideas of DAOs will be incorporated into centralized structures to make centralized Web2 structures slightly more democratic and slightly more kind of publicly community and governance oriented, rather than fully, DAO decentralized.
Eddie, I'll let you have the last word on DAOs.
Well, well said. I would say, just like Jehan said, when you only have a few folks within the DAO to do work, it's not sustainable. At the same time, for those who can make decisions, if they're investment decisions, the direction of the regulator is they need to be regulated. So it's a real conversion between the Web2 and Web3 world in this respect, I think. Ultimately, investment, driven type of DAO will be regulated.
Well, I think one thing is really, really clear, and Jehan, I'll borrow your phrasing. It is about a hybrid. This feels more like a long tail evolution. And as the innovation keeps moving forward, there is also pulling best practices from the traditional world. And somewhere in between lives this world, which is the future that you're all a part of. And audience, thank you for joining us on this. And Alfian, Eddie, Jehan, thank you for giving us a glimpse of this future that you're investing in, that you're building on, and that you're helping pull enterprises into. I really appreciate you all joining today.
Well, my pleasure.
No problem. Thank you for having us.
Thank you.
And audience, again, so many rich conversations here. I hope that you got really so many seeds of understanding that will blossom into a fuller, more insightful vision of what the future holds. And for more of these conversations from the All Market Summit, all you have to do is click on Yahoo Finance web pages. Welcome, everyone. No better place for the Yahoo Financial Market Summit Extra Asia 2022 than right here in Hong Kong, where founders, innovators, and builders meet. And no better time than right now as we dive into this paradigm shift to explore blockchain technology beyond crypto. What are the blockchain applications in the future? Well, our panelists right now include a founder, an innovator, and a builder. In fact, they all embody this. So we can call them all of those things. We have Brooks Entwistle, APAC MD of Ripple, and he is also the SVP Global Customer Success at Ripple. Gavin Ho, CEO of Axion Global Digits Technology, and Sean Rock, co-founder of Hi. Hi, everyone.
Hey, Angie.
Hi.
All right, so guys, thank you so much for joining us. First in Icebreaker, we called this paradigm shift in 10 seconds or less. This is a challenge right at the start. What does paradigm shift mean to you? Sean, I'm going to start with you.
Wow, paradigm shift, a big change. I guess I was thinking, that the lines of where the industry is going in one direction and then suddenly there's a change, whether it's an iPhone, could be a Walkman to date myself, or could be something like that.
I think what we're seeing with blockchain is definitely a paradigm shift.
Love that. Gavin, what does paradigm shift mean to you?
For me, it means breaking rules, making new norms, start from afresh.
Love that. Brooks.
Paradigm shift to me means moving fast and solving world's problems in ways we hadn't thought of even a year or two ago.
Those are all amazing definitions. And for those watching right now, the definition of paradigm shift is going to mean some of those things, all of those things, and maybe something entirely different. And this conversation is really crafted to really shape that thinking. And so, you know, each of you run very different companies based around blockchain technology and or using cryptocurrency as a form of exchange. And so many people, as we all know, are still scratching their heads on use case. So I want to start with you, Brooks. Ripple launched with XRP Ledger as its token in 2012. Could you share some success stories and how Ripple is practically being used today? You've got a little bit of roadmap there to share. So let's start with you.
Thank you so much. It's great to be a part of this super exciting panel. We have been at this for a decade, and we really started out at the very beginning with trying to find use cases, real world use cases for these digital assets, the XRP Ledger, XRP, and Ripple, the company, was built separately from the ledger and the token, of course, to find those use cases. And very early on, from the very beginning, we settled on the notion of moving value across borders and moving payments, moving flows, and doing that in a frictionless way, which candidly is one of the great last financial services problems to be solved globally and needing to be solved. We went out and started to talk to big financial institutions initially and realized they were not ready at that point for crypto and crypto solutions, and went on and built a network around, yes, those big financial institutions, but also fast-moving PSPs and fintechs.
Gavin, you've built up Axiom Global's, I guess, digital footprint, if you will, business footprint. Tell us, what was the very first success for Axiom Global Digits? What would you define that moment to be, and share that with us?
So thanks, Angie, for that question. So for us, we're a local company based in Hong Kong. We invest in companies in the blockchain space. And we also run an asset management company that helps investors to participate in this space. I think I don't think there's only one success, but one thing that's very satisfying for me is educating and demystifying almost what the promise of blockchain and crypto is to investors out there, demystifying the hype as well as the flag. And this is an ongoing process. And back in my days in the payment space, a lot of companies in TradFi, their biggest competitive advantage is in how big their balance sheet is, not how innovative or how good their products and services is. But with applying some of these technologies, you're taking away some of the risks that are traditionally inherent in this space, like counterparty risk, settlement risk. So in actual fact, what you're doing is you're lowering the access and leveling the playing field for newer innovation to take place. And
Sean, you kind of had a firsthand experience in that. You helped build crypto.com to a customer base of now millions as CMO. Now you've co-founded Hi. So what are you building? Why? And how do you plan on millions more using Hi? Tell us about it.
How do we make this something that the everyday person can actually get involved with? So when you talk about innovation, our first way to, in success stories, our first onboarding is actually through a chat app. So you can use WhatsApp or Telegram to very quickly open an account, okay? And then if you want to have a better graphical interface and you want those things, then we'll ask you to, hey, go ahead and download the app. So it's beginning to take some of the learnings that the other players had and kind of make it even faster. And so for us, we've seen a very rapid growth. We're probably the youngest ones on the panel, and that we started in early January of 2021. So born in COVID, but went to the market, started in May. And by the end of 2021, we were already up to several million, and now we're at 3.5 million members. And we do call our customers members, and that's mindset shift, which we think is missing in financial services, is that instead of extracting profits out of our customers, we ought to be looking at providing services to our members. So I think there are some things that's almost back to the future, and I won't go further into that, but the idea of working really to help our members to achieve the things that we've said, and really foster that mass adoption that anyone can get involved, and they can actually earn a reasonable return on deposits, and then also making that bridge between the fiat world, the traditional currency world, and the digital world. Right now, many of the companies kind of focused on crypto, which has been great, but that limits the opportunity. And what we really want to be is that bridge.
Yeah, let's talk about that big elephant in the room. A lot of people conflate cryptocurrency and blockchain technology, NFTs, Metaverse into this one giant pool of what's happening in the market right now. It is so much more than price action. So I want to put cryptocurrency aside right now. I want to focus on blockchain technology for a moment. This question really is all for you. And I know, and for the audience as well, I know that we have amongst our panelists the entire spectrum covered from retail all the way up to major banks and even countries. So everyone in between. So all of you, how do you see the blockchain technology benefiting, changing traditional finance systems?
What can we do? But the underlier and the need for that is, how do we get financial services deeper into our populations, to unbanked populations, and get the services out there? I lived for years in India in a previous life, and the financial services breakthrough there, if you think about the notion of a digital identification number for all of that population, and the ability that gives the government to get services out there. And that's, I think, the blockchain technology around it. We're also doing work around carbon credits, which is another very interesting market with all kinds of issues around it. But blockchain applicability and tokenizing of carbon credits, we think on our blockchain or others, has real opportunity as well. So we're very excited, away from all the noise and hype and every conference and other activities that are going on around the world. There's real businesses being built. And I think we're just, to your earliest question about paradigm shift, we're finding these in almost all of these applications.
So Gavin, how do you regard the role of policymakers as you're building your business?
Well, I think I see policy usually when I look at it from a business perspective, it tends to be more of a hindrance in the short term, because as you rightly pointed out, right, regulators are slowly catching up, or they need to catch up to innovation. But in the long term, I see it actually as a help, as a vote of confidence in the industry. And that's exactly what we're seeing, especially in Hong Kong right now, is there's a lot of use cases, innovative use cases, where we have to, there's a long period of education, dialogue with relevant regulators that we have to go through. And we cannot roll out these new initiatives as fast as we would like. But at the same time, I understand, they have their concerns, they have their framework they have to work out. But as I said, in the longer term, the faster we can get these policies implemented, the faster we can get these regulations underway, I think is a good thing for the development of the industry.
Brooks, I know you probably have a point to make here, so this.
I think this is it's an important discussion. I think it's a key point that was just brought up. This is a partnership with regulators that needs to happen around the world, and this is on us as an industry. And it's on the regulators to be open to these ideas. If you miss that, I think you really, I think that really is detrimental to the industry. And we have a bunch of different regulators around this region and around the broader regions that we all cover. And the story is a little bit different in every location. I'm sure we'll talk about that. But you've got to adjust your strategy and approach to each one of those.
Yeah, there's no doubt. There's so many nuances when it comes to jurisdictions, but also policy. From different points of view across the Asia Pacific. Sean, you're building out a very specifically geared towards retail space. What, in your view, as you're building out your business and your opportunity to talk to policymakers through this platform, what are the things that they should consider when looking at trading in custody and all of those things for the retail level as they assess the environment in which they hope to regulate?
Yeah, maybe I kind of bridge a couple things. I think the first thing is this device is the device that has, offered what Brooks was talking about, this mass access to services that people have never had before, which is great. Now, from a regulator's perspective, or actually all industry players' perspective, I think what we're seeing is that a lot of the perceptions are probably 3 to 4 years out of date. And what I specifically mean is around things like security, and how the blockchain has developed, and even how cryptocurrencies have developed. Recently or earlier this year, several very high-profile hacks or thefts of cryptocurrencies were solved. And the way I try to explain it to people in a very layman's terms is, imagine you robbed a bank, but when you ran outside, the cement was wet, and you left tracks. Well, in the blockchain, you leave the tracks. And I'm not sure if folks know the story, but Laura Shin did some great reporting where she broke into this, and using some of the firms that exist, such as Chainalysis, CoinFirm, et cetera, people who have mapped the blockchain, and the bad actors are being seen. So I think the state of reality is today, and this is meant for a regulator audience, is that if you're a bad guy and you're going to do a financial crime, to do it with Bitcoin or one of the networks that we typically talk about, you'd be pretty foolish, because it will maybe take a little bit of time, but you will get caught. And I think that is probably one of the best things that is happening for the industry, is the rise of these network analysis companies has really allowed companies like myself to take not only things like KYC, knowing our customers and doing verification of their identity, but also knowing their wallet and knowing that this transaction is coming in. So the work that we do in terms of transaction monitoring and compliance is on par with what folks would see in traditional finance. The way that it's done, paradigm shift, is done though through electronic tools that are, I think, really, really amazing. And what has happened, as I said, in the last 3 to 4 years, it is significantly different than where we were, let's say, in 2017. So hopefully that will give regulators some pause and some opening to it, versus reading, the headline news, oh, this happened. But actually, if you wait a while and see how it all transpires, it's extremely transparent. That's kind of the core benefit of the blockchain.
So that is a great point. I want to talk about Hong Kong policy specifically, the policy changes that we're seeing in Hong Kong and licensing regime for virtual asset service providers. How might it impact the ecosystem, do you think? And Gavin, this start with you.
Okay. No, I think is a great development for Hong Kong. To my point earlier, it legitimizes the industry. It sets standards and rules by which participants have to follow. But I'm hoping it's a first step in a roadmap of laying down a level playing field for participants, right? For regulated participants and unregulated participants. And more importantly, offering the room for innovation to develop with regulated license holders, so they don't kind of being unfairly treated, or because of over stringent regulation, that they're not competitive with unregulated parties or equivalent parties in other parts of the world. And that's kind of counterproductive, where you kind of, because to Sean's point, everyone can access services through a mobile now, right? It's not like I cannot access services of other providers in other markets. My point is, it forces consumers to almost go to more unregulated venues to do their trading, to do their investments, and that's counterproductive. So we have to leave room for innovation to foster.
It's a tough road to hoe, and how have you done it there, Brooks?
I came out of the ride hailing and delivery business, where regulators that didn't set those policies often ran into trouble, because ultimately that market determined, or the consumers there determined kind of what they wanted to do, and they lost control of it. Those that set rules early that were predictable actually had much greater success and ultimately impacted their citizens in a much more effective way. So everywhere we go in this business, we're in dialogue with regulators, whether or not it's here in Singapore where I sit or elsewhere in the world. We're trying hard to push them towards expressing and laying down rules that we can then all follow as an industry. We're very focused on the enterprise side of things, so I appreciate that it's much more difficult in some ways around the consumer side, and a lot of these regulations are very focused on the consumer front, but it's an entire industry that needs to be in this together.
Sean, what do you think? What do you think of the current regulatory landscape that is Hong Kong and across Asia?
Yeah, I was going to say, building on what Brooks and Gavin have said, I think having the predictable and the rules of the road is very important, and that's what regulators provide. I'd give regulators an opportunity to think about some things, though, in terms of the opportunity for Hong Kong. If you look at how the SFC regulates things and how Hong Kong has not only become, depending on the year, a trading volume and IPO, top tier market. We have that, but let me give you another market that you may not think about that often, which is the gambling or gaming industry. You can look at, at Macau, but let's look at Hong Kong's largest taxpayer and largest charity, the Hong Kong Jockey Club. The regulations that they have are very stringent, but they operate an outstanding and world-class operation. And that's the kind of thing that I think we should be looking at, is setting up regimes so that the activity can happen, and it can happen in Hong Kong to Hong Kong's benefit. And the innovation, all the things that we talked about, exactly go hand in hand. So instead of looking at it like, oh, we can't do it, let's look at how we can do it and do it really well. And I guess that's really the opportunity that Hong Kong has in its hands. I think you've seen, some other markets have gone sooner, but they've actually found out that there are some issues. So, again, everybody, we, the industry, can help on the education front and in that area, but providing the best regime, I think, is the thing that I think really can set Hong Kong up for this huge opportunity.
Yeah, that is a great point. There's often the first mover advantage, but then fear of missing out. Another really interesting characteristic about Asia Pacific, and really a global, this is a global issue, but specifically across Asia, we know this, the uptick in the global digital remittance market, it continues to grow. Obviously, the distance created by the pandemic, the broader acceptance in emerging markets, but how is digital technology advancing, accelerating? What other trends are we also seeing in this space as a result of the technology of blockchain and what we're, and the ease, the seamlessness, the frictionlessness that people can transfer money to their families and friends overseas and abroad?
I'll take a crack at this because this is just one of the great opportunities, and I think where we see just a huge use case for this movement of value across borders. The remittance market, while it did stall a bit during the COVID, is projected to continue to grow. It's a $750 billion market. And that money that is sent across borders, as we've all seen from living in this region, is often done at usurious rates of 6-7%. It takes days to arrive. If it does at all, that money leaves workers' hands that have worked hard for that money, and their family needs it on the other end quickly. Just yesterday, I went down to Lucky Plaza in Singapore with a lady that is close to our family. Emergency need in the Philippines. We went to BKK Forex, which is a RippleNet partner, an ODL adopter as well. And that payment transferred over RippleNet through BKK Forex. Again, just the ability to have certainty. This was a hospital bill on the other end, and you just can't afford to have that go lost in 4 days, nor take 7% out of it. So this is a great one, and we're excited about what we're doing.
That's incredible. How, Sean, I'm curious,
how
keen. You think about that. Yeah.
Yeah, definitely. So I have a background in financial literacy, and when people ask me, why did I start high? This is probably the preeminent reason why. This isn't solved yet. And the great work that Ripple's done with a number of its partners But I would say some of those partners are some of the people that have been my clients in the past. And I've looked at their balance sheets and I've seen what they make off of the hardest working people in the world. And it's actually sickening. But I would also extend it to the whole financial services network. You and I go to transfer money from Hong Kong to the UK. It's going to be lost in space for three to 4 business days. It's going to cost £25. That is insane in today's day and age. The last time I checked, it is 2022. It's not 1980. So I think from that perspective, the systems and those things, from what I can detect, yes, I've worked inside a financial services firm. They're actually using digital technology. The money is not, being put on a ship and moved. The money is instantly transferred from Hong Kong to London and sits on their balance sheet, earning interest for them, not for us. So I think changing that whole idea, and Ripple has been really at the forefront of this. But this is where what we're trying to do is provide the access to this, to make it so simple that someone just simply picks up their phone and they're able to make that transaction immediately or darn near immediately. In the blockchain space, we're really upset when it's 20 minutes. I think we need to give ourselves a little bit of a breathing space, comparing it to the 3 business days approach. But getting a transaction settled with certainty, it's on the blockchain, you can see it, and the money then is convertible if necessary into traditional currencies, or many more merchants and folks are accepting, not only stable coins, but cryptocurrencies as well. So to me, this is something that, of all the paradigm shifts, this is the one that I think we have the greatest chance to really make a meaningful impact on.
I want to talk about CeFi, centralized finance, DeFi, decentralized finance. These are 2 very distinct spaces that are reflective mirrors of each other, and now they're starting to intertwine at some points. Do you all see an eventual shift to potentially decentralized finance becoming a little bit more mainstream? Do you see more institutionals, Gavin, for example, looking for those opportunities in decentralized finance? Do you see, Brooks and Sean, for example, regulators also wanting to get into the space? What are your thoughts when it comes to decentralized finance?
I'll go first. I don't think the CeFi or DeFi is so black and white. There are certain advantages of DeFi, right? What we've seen in the last 3 months, certainly DeFi has emerged fairly unscathed because they rely on code in underwriting loan decisions rather than using human to make that decision. But on the other hand, because of the market environment, the regulated environment that we operate in, there has to be an element of centralization in the sense that someone or some entity has to be backing those transactions or operating those transactions. I don't think we're going to go away with, to DeFi in that sense anytime soon. But I do see, going back to my point earlier, there's certainly a lot of room for traditional so-called CeFi companies to adopt a lot more DeFi technologies and practices from the perspective of efficiency and effectiveness, and bringing down that cost and barrier that I'm talking about.
Finally, last question for everyone. This has been a very disruptive time for the entire industry. The crypto market has taken some pretty volatile big hits in recent months. We've been observing contagion, and that has really taken up a lot of intellectual space for this industry. What do you think that we can all learn from this? And how are you responding to skeptics out there or customers who are worried about volatility?
Maybe I can take a run at it. I guess I would say the cliche would be the genie's out of the bottle. It's not going to go back in. So maybe to get that there. But I guess I will give it, and I'll try to give it with some Hong Kong flavor as well. I talk to people about the rise of e-commerce. And today, I don't think we would want to live in a world where we didn't have e-commerce, whether it's Taobao or Lala Move or any of the services that we're used to, ordering our lunch, all of those things. But if you hearken back to around 2000, there was a situation where we had a very disruptive situation where a company called AdMart was hacked, and it set back e-commerce in Hong Kong massively. People were very concerned about, oh my gosh, my credit card online, how can I possibly trust that? And I think that that's instructional for us to think about. Now, I'm not saying the events of the last 3 months were pleasant for anyone, but I think it is instructional. And when we make, or when an industry has challenges like that, and there are mistakes made, people learn, systems improve, and those type of things. And so if you go forward and say, okay, where will we be in 20 years? Will we have more or less cryptocurrency or blockchain applications? I think the answer is pretty clear, much more, just as we saw with e-commerce. So when you ask, how do I speak to people? I try to help them think about, well, remember when that was happening and people were like, I'm not so sure. I think we're going to see maybe not exactly the same thing, but something on the same scale.
Yeah, I would agree. I think this historical perspective is important. And taking this to Hong Kong as well. I first landed in Hong Kong in 1991 as a young investment banker, and the markets, early markets, whether I was in equities, fixed income, many of these geographies weren't even open. These markets were still incredibly volatile. There were issues and crashes and all these events along the way. And so fast forward to this crypto decade, if you will, that we've all been involved in around digital assets. And we've had several downturns during this time already. We've all learned, this whole panel has been through these, and we learn a little bit more each time. And I love the notion that the genie is out of the bottle, because this is not going back. We're getting a little bit better every time. And one thing I would say, which I think is we've learned, whether or not you were in e-commerce at one point, Web 2.0, or you're in Web 3.0 now, this is an amazing time to build. And whether or not there's fantastic talent available, there's fantastic opportunities potentially on the M&A front or investment front, but you got to be incredibly focused on what you're after and limit the chasing of bright, shiny things, and do with everything that we're doing from a mission standpoint at Ripple and the other companies on this panel. I think we're all doing this, and that's how you succeed during these dips. There will be another one, but what you do during the downturn, I think, differentiates you long term.
Building today takes courage, takes conviction, and it takes a lot of insights. And I hope for our audience, that was very, very clear today. A lot of insights from this incredible panel about what each of you are doing, but what we heard was something extraordinarily foundational, which is this has already shifted the realities of so many people out there. And if we, to your point, Gavin, I love what you said, which is to identify the signals amidst the noise. These are great signals indeed, and I really appreciate all of you for joining. Gavin, Brooks, Sean, thank you so much for your great insights here.
Thank you, Angie. It was real fun.
Great time.
All right, those guys, great insights, shifting paradigms, inspiring every step of the way. And audience, I hope you definitely felt that. Check out more interviews for All Market Summit on Yahoo Finance web pages. I'm Angie Lau, Forecast Editor-in-Chief.
Hello and welcome back to the Yahoo Finance All Market Summit Extra Asia. And I'm your host, Richard Lai. For this panel, we'll be talking about going from the traditional finance system to virtual economy. Joining me are Mr. John Zhang, who's the founder of Esperanza, Ms. Stephanie Leung, who's the director and group co-CIO of Stashaway, and Mr. Fred Ngang, co-founder and co-CEO of Bowtie. Thank you so much for joining me today, everyone. And to kick off our panel, I'd like to ask each of you to give me this answer within 10 seconds. What does paradigm shift mean to you? Maybe we can start with Stephanie.
Sure, 10 seconds, short time. But I've been recently rewatching Doctor Strange 1. And to me, I mean, paradigm shift is when Doctor Strange actually met the Ancient One. And Ancient One actually opened him up to the idea of a metaverse, or a multiverse. So that to me is a paradigm shift.
I do wonder who is your ancient one there. Fred, how about you?
Sure, I like the movie too. Digital adoptions for all financial service, especially insurance.
Oh, very good pitch. And last but not least,
to
John?
me, it's very simple. It's disruption. It's basically disruption in the different sectors.
Wow, very short and sweet indeed. Now, my second question for especially both of you, I guess, mainly. You've dedicated a lot of your time in the traditional centralized finance space. And then one day you decided to move into the virtual economy. So I guess in less than 1 minute, perhaps, can you share with us your story of how you made that leap of faith? What made you believe in virtual economy? I guess maybe Stephanie, you can start.
Sure, yeah, I've been in the traditional asset management industry for almost 20 years. And I mean, what I've seen is a few things, right? Technology is actually moving forward very, very quickly. And traditional finance is actually one big elephant in the room that hasn't been really disrupted by technology. So we have, for example, Uber disrupting the transportation industry and Deliveroo, for example, changing the way that we eat. However, in finance, there's very little kind of innovation. So, I mean, what we've done at Stashaway is actually to disrupt the traditional asset management industry by introducing digital wealth management, which basically means that consumers or users get better product in terms of global asset allocation portfolios at a much lower cost, as low as 0.2 to 0.8% of annual management fee, and with very, very low barrier to entry. For example, anyone with $10,000 can open an account, and there's no minimum balance, and people can withdraw anytime. There's no lockup. So that actually addresses a lot of the traditional barriers of investment and also financial inclusion. So I mean, that is one big reason why I decided to take the leap of faith to move into the virtual, I guess, digital wealth management industry.
And just very quickly, what are the main enabling factors that allow you to do so and making this more accessible?
Yeah, I guess technology is a big one because traditionally, if you think about mutual funds, there is a big team or an active manager running the fund. And this actually requires a lot of human capital. And these people are very, very well paid. So that's why that's why you're getting charged a lot from buying mutual funds. However, using technology, you can actually scale both the management of the funds as well as distribution of the funds. So that actually enables us to lower the cost dramatically, and we pass on that lower cost to all our consumers.
I see. And Fred, in your case, it's insurance. Do you see similar kinds of advantages? And actually, well, let's start off with how you made that leap of faith.
Well, sure. I would say insurance even more behind. We're like 5 or 10 years even behind online bankings. If you look at all financial services, right, everything has been digitalized, like online bankings, lending, wallet. But insurance is always the last man standing that hasn't really changed. It's now almost, now it's like 2020, right? We're still selling insurance one-to-one and face-to-face. It's actually a very outdated experience. So for us, for Bowtie, we actually built a new insurance company on modern technologies. Everything is online, it's 100% online on the smartphones. From application to claim to underwriting, you can actually just access using your smartphone and from the internet. In Hong Kong, even though a lot of people think it's such a well-established insurance sector, but the fact is that we still have 120,000 agents. It's only a few percent digital adoptions. So there's a lot of things that can be disrupted with modern technologies.
I see. Now, John, you know both companies quite well, I understand.
I'm the advisor to both.
I see. I mean, apart from what they've both said in terms of advantages moving to starting in the virtual economy, do you have anything to add, like maybe from the consumer's perspective, you know, apart from obviously the lower costs, what other advantages are there?
Well, to me, traditional to the digital is basically a continuum, is the part of that development process. So I think at some stage, especially now, we are sort of in a hybrid form, more traditional, less in terms of digital, but I think that will keep continuing, and that will be to the benefit of the consumers, because as the digital platforms, as we develop, it would lower the cost, lower the entry barrier. It would be what people say, you know, democratize the entire process and making it even more accessible to everyone concerned.
I see. Now, obviously we were talking about the leap of faith, and I guess pretty much, well, especially you both, you actually left the corporate world to start your own fintech company, and I'm sure it wasn't easy. I don't know, see, you're smiling, so I'm sure there were some interesting stories there. Could you name any of the mistakes you made that eventually led you to success? Because some story as a not so much a warning, but an advice to people who want to make a similar leap of faith.
Okay, so yeah, I guess there's many lessons I've learned, but I guess one of the very key important thing to think about as you take the leap of faith, as you said, from a very safe corporate job into starting your own company, or to work for a startup, is by using a framework that's pioneered by Jeff Bezos. It's basically regret minimization framework. So think about, if you haven't tried, would you actually regret? And what Jeff Bezos thought was, he was seeing internet expanding at a very fast pace. And he thought to himself, if he didn't take the chance of taking that leap of faith, he would most likely regret if he didn't do it. Same thing for me, when I actually left my role at Goldman, I was thinking the same thing. If I didn't actually try, and looking backwards, everything moved ahead as I was envisioning, would I actually regret? And I thought to myself, yes, I would probably regret more if I hadn't tried. But back to, I guess, the lessons learned. Number one is find partners that you can really trust, because it's always, the issues at hand always change. The people that you work with don't tend to change. The team is the most important thing. If you put together a really good team, the team can solve actually any problem. So having the right mix of people, that is the most important thing.
Very good. How about you, Fred?
I think it's the same. I actually read the same book as well. I would say, for my background, I'm an actuary, so I've been in the industry for quite a bit. And I wouldn't call it a mistake. I would say we make a lot of pivot in the early days. Okay. Me and my partner, me and my team, in the early stage, we actually started a boutique advisory firm, and then we start to build software, we start to build products, and later on we got a chance to build the first Hong Kong virtual insurance company. There's a lot of learning, allow us to understand the pain points, allow us to push through the challenges. But if you ask me, two very important aspects is one of them is have a very clear vision. A lot of startup, it takes time to find out what you want and what you want to be. There are so many opportunities, so many pain points. You have to be very clear to the team what is the true north, like where you want to go. Sometimes we're very busy with activities, and you forget about the clear vision and what are the key objectives that we want to achieve. And sometimes we're being too reactive to too many new things. Having that focus is very important. The second thing, just to echo what you just said, is having the right team. A lot of startup, they started because of an idea. I would say we started because of the team. We are a serial entrepreneur. A lot of, in the early days, some of the interns in the first startups are still with us, and now are the core engineering team, the core team. I would say we actually learned a lot throughout this journey, and we wouldn't be able to start Bowtie if we didn't have the previous experience. So I would say having that clear vision, and that will attract the right talent to work for you.
Now, John, I guess this is a fitting question for you, since you were the former finance secretary of Hong Kong. What can traditional financial institutions learn from fintech startups such as these two?
That the world is infinite. There's nothing that is impossible. And I think anything you can imagine, you can actually do with the right idea and the right talents. And I think these people are doing that.
Were there any big surprises in the recent years? What were the most memorable achievements, perhaps, in the virtual economy market, apart from these two, of course? Or, you can name some examples. I
think there are quite a lot. And they are quietly disrupting the existing traditional market. And I think a lot of the traditional markets, they realize this particular point, but they are concerned that if they were to do both a digital platform and in a traditional way, they may be cannibalizing each other. And that creates a problem for them. So they really have a tough decision to make, what kind of mix they would do as they progress forward without hurting their own top line. And I think that's an important consideration.
So I guess this is more of a concern for you both when it comes to competing with existing big names, right? But how have, from your perspective, how have people's view towards your kind of virtual economy market over the years? Are you seeing an obvious increase in adoption rate, or earlier you mentioned that there were people who doubted. Gave you doubts.
Sure.
How have this kind of perspective changed from what you see, Stephanie?
Sure. Yeah, I guess for us, we're still very, very early days in Hong Kong. So Stashaway was actually founded in Singapore about 6 years ago, and our headquarters is still in Singapore. When we started in Singapore, it was basically people didn't have any concept about digital wealth management. It's actually similar to where we are in Hong Kong right now. But throughout the 5 years that we were in Singapore, we've actually grew to become a household name. So if you go in Singapore and talk to people about Stashaway, people actually know about Stashaway as a digital wealth manager. People know very well about the concept of doing your wealth management using a mobile app and online. So we're starting that in Hong Kong, like what we did 5-6 years ago. And I think, given the similarities and demographics and also needs, we're very, very optimistic that we'll be able to actually grow this business in Hong Kong. We have a few other new players coming in as well, so which is great. We create a bit more awareness. And to be frank, our biggest competitor is actually not each other. It's basically the money sitting in the bank. Because currently, given the even though interest rates have been rising, it's still fairly low. So if you leave your money in the bank, every year you earn 1 to 2%, whereas if you invest the money wisely, using a good portfolio that helps you diversify risk, you can make maybe easily 5-6% more without taking on a lot more risk. So that actually compounds over time. So you think about an investment time horizon for retirement, for example, for a lot of people, that's 30-40 years. And a few percentage point difference in each year actually compounds over time. And through our digital wealth management platform, we hope to help people to actually do that kind of more, sustainable investment over a long period easier. And I know in Hong Kong, the perception is that people like to maybe punt in stocks or maybe gamble a little bit, but that's not the sustainable way to do investment. And hopefully, we'll be able to change that perception in Hong Kong over time.
Very good. And Fred, what about you in the insurance market? You seeing, you guys obviously work very hard on your marketing end in Hong Kong as well. And actually I got to interview one of your colleagues last year as well. So are you also seeing an obvious adoption rate for your kind of business?
Yes. I would say before we have virtual insurance, the digital adoption is only below 2%.
Oh, wow.
So right now what we're seeing is around 5% or 8%. We have seen that more people are considering online. Who are this segment, right? Usually people who are more tech savvy, more educated.
Younger, maybe.
The younger, actually 1/3 of our customers are below 30.
Wow.
So relatively young for health insurance. And these are the people who don't want to buy from the agents. They don't like pushy sales. They want to spend the time to research and read everything online. It's almost like when you go travel and buy shopping, right? You want to read all the review. You want to understand it before you buy it. So the conventional wisdom is insurance is sold but not bought. But we're able to challenge that. Hey, there exists a segment that actually want to voluntarily do research online and they buy online.
Great. Now, financial inclusion is on every financial institution's agenda, right? Now, where do you see the advantages for small and more nimble fintechs over their bigger competitors and their traditional banks? I guess, John, I would like to get your perspective on that.
Financial inclusion is a very important objective in any of this innovation because we want to make it more available and accessible for everyone concerned, every sector, every economic strata of our society. And that has been a problem in the past with traditional finance, with a lot of people being left out. But now, with on a digital platform, you can make it more direct and more accessible and more affordable.
Yes,
and I think that's going to become a very big change, a big enabler for more people to be included in in that whole process.
I see. Do you, any thoughts?
Yeah, I guess that is the value that we have by. But the reason why we set up Stashaway is because our founders were actually looking for good ways to invest the money over the long term, and they've looked at like mutual funds, which a lot of people are looking to. They've looked at, for example, private banks, which have very, very high barrier but better products, but there's nothing in between, right? It's a empty space. And what Stashaway has built out is actually a institutional grade asset management platform. So what we do is actually global asset allocation using ETFs. These are products that are traditionally only available to private bank clients. So for example, if you have US $2 million, you can go open an account and get that service. But if you go to today, let's say you go to a bank or you go to a fund house, there's very little advice on how do you actually allocate your asset among, for example, US equities, bonds, like Hong Kong equities, etc. They'll sell you funds, so you can buy, like, for example, specific funds, but it's very hard to get that asset allocation advice. So, what Stashaway is set out to build is actually a systematic way to help people to actually allocate your wealth among all these different asset classes, which traditionally has only been available to very high net worth clients.
I see. And Fred, earlier you talked about trust. So I'm very keen to know, obviously for a virtual economy kind of business, you're kind of removing the, how should I put it? The customers are less likely to see human staff, and
Yes.
You're meant to go straight to the website or the app. But so how do you build up that trust on that end?
It's a very good question because we are selling insurance. So insurance, especially for health insurance, it's a promise that we made. If something happened to you, we pay you claims. It may not happen in the next 2 years. It may happen in many years later. So people care about the trust because they want to make sure that if they need the money for medical reimbursement, we're able to afford it. We're able to pay them. So, but the way that we build trust is very different to the old world. In the old world, a lot of people may look across the harbor and see if they have a big billboard to see that this is a very wealthy company. But now it's different, right? People look online and see, do they have good reviews? So what is the vision of this company? Do they buy not just buy the product? Do they buy the team? Do they believe in what you believe? For example, we actually focus on peer protections. A lot of products that we sell in Hong Kong have some saving elements. And we really focus on just very simple, very affordable insurance products. Insurance Authority launched a study on protection gaps. They are saying that every adult right now still need 2 million term life insurance, but a bow tie is only $70 for 35 years old. So it's actually very, very affordable. And so I would say back to your question about building trust, it's about having the vision, having the very transparent review online, having people who are able to endorse us. I think John Zhen played a very important role in the early days. Some people say they trust Bowtie because they trust John. They trust Sun Life, who is our investors, also Mitsui. And also partner with credible partners who are able to also uplift the brand trust. We have do a lots of B2B partnership because that actually help us. We don't hide behind them. It's always a co-branded partnership. It's always a co-branded activities. So
good
that
for
help
brand
us.
awareness.
Exactly. So these are the things that it's not that you spend money can earn trust. These are the things that you do can help you to become a more trustworthy company.
So actually, both Fred and Stephanie raised the point that the difficulty faced by innovative technology startups, there are two of them. One, what is virtual insurance? What is digital wealth management? People not aware of that, so we need to educate people as to what they are. And the second thing is, what is Bowtie? What is Stashaway? And that brand needs to be known. People need to have trust in it. And I think that is an important factor. Once you overcome these two issues, I think the selling is more clear.
Do you give any particular tips on that to both of them?
Well, to earn trust, I think with Fred and Stephanie, what we have done is to try to build that with people known to them, like myself.
Okay.
And so with that, we sort of try to gain the trust of the people who may get engaged in that. And then I think that is important. And they also need to get around and talk more about virtual insurance, digital wealth management, and so forth, because these are new concepts, and most people don't know what they are, and if they don't know what it is, they can't trust it. And so we need to do quite a bit of education.
Yes, maybe through conferences such as this one, and,
hopefully,
and also websites and all, even traditional media, I guess.
Absolutely.
Now, how about in the areas of virtual economy? Where do you see the opportunities for your business? What are the, I mean, you've touched upon some of those earlier, but I'd like to know some more specific problems that you are trying to solve for your customers and potentially even the broader industry.
Yeah, I guess from a business side, we want to be a major player in Hong Kong in the wealth management industry. We like to become a household name that people associate us with. And that is not easy because in Hong Kong, actually, there's a lot of choices, right, in terms of financial products. And the way we try to differentiate ourselves is by really think about what do investors need in Hong Kong. So I think investment to a lot of people is actually quite confusing, very difficult, very time consuming. We've actually done a video advertisement with John, trying to highlight some of the common issues that people run into. For example, there was a banker in the who was staying late till like maybe 3 a.m. looking at U.S. stocks, where he should be actually getting some sleep. There's a couple who should be enjoying the wedding, but they were both checking stock prices. Oh no!
Not a good start.
Yeah, exactly, not a great start to a happy life. But using a investment platform like ours, we can actually automate the investment for a lot of our customers so that they can actually get back their time. They can get back their life. They can spend the time with the families. They can spend the time learning other things or exercising, spending time for work, for example. And I think one of the very, very important concepts that people are missing, or when you think about investments, is how much risk you're taking. So to that end, we've created something called the Saturated Risk Index, which basically tells people if you choose a particular portfolio, what kind of drawdown risk are you exposed to? And that is the only thing that our investors need to choose when they set up a portfolio with us, because our systematic strategy actually takes care of the risk. So it makes it very, very easy. You just need to answer one very, very important question, and that is the question that everyone should answer before they invest, is how much risk am I prepared to take? And the reason for that is because even though long-term investing would generate positive returns, so for example, if you invest in the S&P index in the last 30 years, every year, the annualized return has been around 12%. The problem is that within that 30-year time frame, there was corrections, and these corrections are inevitable. In fact, we're going through one right now. S&P fell 20% from its peak, so we're in technically a bear market territory. And for a lot of investors, if they don't know their risk, if they don't know, like for example, the stock that I hold, like what kind of risk it actually entails, it's very easily to be shaken out of the market. And that is why it's so difficult to do long-term investment. And so our platform is actually, our systematic strategy is set up in such a way such that you can very easily manage your risk. And I think that actually helps our investors to actually stay invested in the long time.
Okay, and in return, obviously that also help make a new growth opportunity.
Yes,
for
exactly,
your business.
and helps us actually to differentiate ourselves versus a traditional financial product.
I see. And Fred, in your case, I guess maybe the insurance space was getting a little stagnant a little while back, because you said it's still very, very early days for you guys in terms of entering the virtual economy. So I guess this is also creating a new growth space for your business in terms of breaking into this virtual space.
Yes. Well, there are lots of pain points, and there are lots of things that we can, with technology, we can bring it to the market. We talk about convenience, we talk about affordabilities. Another one I want to bring up is transparency. Right now, if you want to buy insurance, you have to access through agents. And there's so much that you don't know. For example, when you say investment is confusing, I would say insurance is even more confusing.
Oh, really?
And even more boring. And it's actually very technical. It has saving components, it has guarantee, it has some of the different risk factors. So education is very important. We're trying to be very transparent. It's one way to earn trust as well.
Yes.
People do want to know what if there's any hidden evils details. We're trying to put all the details online, so you can assess. You can actually read all the informations. Because right now, for people who buy it from a traditional player, a lot of time they don't know what they buy, because it's a product that's sold to them. They may not read all the details, and they don't know how much they charge, how the claim works, and everything. So we're trying to invest a lot in educations. We invest a lot in the recommendation engines. Education meaning not just video. We have a lot of content. We have a lot of articles. Right now we have about 2 million organic traffic every month, just on article. We publish 40 articles per month, 30 to 40 articles on insurance, on health content. These are the people who really want to read it before they actually buy it. So it's a very different behaviors, but I would say education is a long-term investment. People, in order for them to trust your brand, they need to trust your content, they need to trust your recommendations. So all of these are very important. I think with much higher trust and transparency, that will be able to attract the new generation of the customers.
So I guess we can wrap up with this last question. Do you see centralized finance and virtual economy complementing each other? Because even though we're saying, one is more convenient and more accessible than the other, are you necessarily saying that, one should overtake the other, or are they going to coexist, at least for the near future? Maybe John, we can start with you.
I think they do. I think they do complement. And as I said before, it's a continuum. So it's not a either or situation. And I think we'll be going through this hybrid stage for a long time before we go fully digital, because people don't develop themselves so quickly. So I think it's a gradual process, and it will take time. And I think we're still at the beginning of it.
Do you think it's progressed faster than you expected, or?
I think with COVID, we have seen an accelerating trend, but it's not really overnight kind of a thing.
What about Stephanie?
Yeah, I definitely think that, this is a big trend, and we're here to embrace it. But having 24/7 access to your mobile phone doesn't mean that you don't need to speak to somebody.
Okay.
So actually, customer service is still very, very important for us. And we have our customer service team pick up the phone, like answering questions through WhatsApp, email, etc. And we also have wealth advisors who serve our high net worth clients. So it's, that human touch is also very important. And to Fred's point about building trust, I think you like to put a face still, even though it's a virtual brand. So I think that is still very, very important.
Fred?
Well, very similar message. I think the decentralized and all these no human, that would be very far away for insurance. I would say it's a hybrid model. I agree with John that technology plus the human touch is going to be the way, at least for the next 5 to 10 years, especially for health insurance. Some of the people, when they file claims, it might be the first time going to the hospital. They may not familiar with the process. Technology can make it simpler, but when you need help, that human touch is very important. You need to give them a chance, the options to able to call the claim specialist to give them that peace of mind. So we, even though we're investing a lot in technology, we're also making the same level of investment into the customer service. That's why when we have this new marketing tagline, we say, 有人幫冇人sell. This is actually a very important concept because a lot of people think virtual have no human touch. So we want to correct that misconception by saying that we have technology to help you, but if you have any questions, you can still call us. In fact, we have already handled more than 100,000 inquiry one-to-one on either the phone, on live chat or emails. So you have a lot of digital channel or hotline to reach out to us if you need help. We're always here.
Wow, That's a very good spot for us to wrap up, I guess. Human touch in a virtual economy. So thank you so much, John, Fred, and Stephanie. And thanks again to everyone for tuning in to the Yahoo Finance All Market Summit Extra Asia. And we will see you next time.